Hello everyone, welcome to my YouTube channel. Today I am back with another market update series. This was a very jam-packed week and I want to uncover a lot of details and a lot of moving parts regarding the markets. So the two main theme on this week was this week Nvidia released its new AI chip that is GB200 and the GTC kicked off starting Monday. And today we had FOMC press conference that is the Federal Reserve Chairman Jerome Powell has decided to keep the terminal rates same at 5.25 to 5.5%. So we'll uncover all these things and we will discuss the impact of these events on the markets. So without further ado, let's jump on to the analysis and discuss the macro section first. In the macro section, we have a lot to discuss, and starting with the Nvidia, GTC. So what is GTC? It's basically Nvidia hosts the technology conference wherein they release new products and services. So they started this event on Monday, and it was a highly anticipated event because Nvidia single-handedly is taking the markets up with its AI revolution. And they also released their new top-of-the-line GB200 chips, and that was received very optimistically by the markets. So that is from the Nvidia front, wherein they will be hosting this event by the end of this week, and they will be having tech demos and whatnot. The important part over here to emphasize is the AI revolution. People are calling it a bubble, but this is just a start of the phase. So the actual potential of these technologies is yet to uncover. So OpenAI is also working with multimodal AI models like Sora. So it's very nascent stage right now, and some people are calling it a bubble and whatnot, but without recognizing the actual potential, we cannot say for sure that if it's a bubble or not, because let's assume that this technology is turns out to be groundbreaking, then all of these valuations will be justified. So without having a real ground proof, the time will only tell. But as of now, the companies like Nvidia are at the forefront of AI revolution, and like always, many a times AI is single-handedly bailing out the markets. So what do I mean over here? So remember, last month Nvidia has had its earnings, and the market gapped up significantly higher and changed its entire sentiment. So never ever do the mistake of shorting the markets when you can actually see that the sentiment has changed and the markets are going up. Always remember that markets can stay irrational long or more than you can stay solvent. So respect the price action. And now let us jump to the meat of the game, that is Fed Day. So today there was an FOMC conference by Federal Reserve in which they actually did two important things. First, they kept the rate or the terminal rate at 5.5%. So the government Fed funds rate is right now sitting at 5.25 to 5.5%. Now, the other thing that happened is Fed Chair Jerome Powell, had its press conference, and he answered a lot of questions. Now, he feels pretty, good about the inflation story, that it is coming down significantly. But still, he needs more confidence on the incoming data to decide whether he's going to cut rates sooner or later. Now, one thing is for sure, that the rate cuts are going to come this year, but how much and when still remains a question, because inflation data keeps on coming, hotter than expected. So even right now, CPI data came in at 3.2, and remember, the Fed's goal is 2%. So one thing to note is, obviously Fed is not going to wait until the inflation data comes to 2%, but they need to see a sustained downward trajectory of inflation. So the remarks from the Federal Reserve Chairman Jerome Powell was well received in the markets today, and the entire sentiment around the interest rates and inflation has again became positive, and markets are rallying like crazy right now, and even for the pre-market hours it is going up. So we may see a little bit of pullback in tomorrow's morning session, but I don't see a major correction happening very soon. So until we see cracks, do not make the mistake of shorting. So now let's go to another important event that happened this week is Google and Apple are apparently rumored to have a partnership in a way that Gemini, which is their AI offering, is going to run on Apple platforms like iPhones. So that is a big deal, and that is why the Google stock is rallying like crazy in last 2 to 3 days. Also, on the geopolitical front, Putin won a landslide victory in the elections in Russia. So I don't see, a major change in the Russia-Ukraine war. Apparently, Putin is winning. Putin has a dominant side. So until and unless NATO members give support, more and more support, more and more aid packages to Ukraine, the situation still remains the same, which is Russia is on the dominant side. And lastly, I had a chance to see a demo of Devin, which is an AI virtual software programmer. And if this demo is really, promising and compelling, then, that is going to, have a major waves in the, economy, because the entire market will price or do the valuation of the software companies in a completely different way. Now, you may think that this is a finance channel and why do I discuss about Devin, which is a software engineer, virtual software engineer product or a service. The reason why I say this is as and when AI gets more and more smarter and more accurate, the pricing of these companies will dramatically change. Why? Because let's say a company is spending $100 in capital expenditure or operating expense or OPEX. They will not need more people, and the existing set of people will be having the productivity gains of at least 2 to 3x. So the valuation will also change because the OPEX has come significantly down. So this repricing or the valuation change paradigm will be very crucial for the companies that are directly related to AI. So that is why I bring these points, because the multiples that these software companies enjoy are going to be significantly higher if the AI tools and AI products and AI services are accurate and are really promising. So that is going to change the way we think about the fundamentals. So that's all regarding this macroeconomic section. And now let us jump to the technical charts and let us see what conclusions can be derived from different time frames. And now let us start from the weekly time frame. In this section, I want to discuss three things: key insights for the weekly time frame, and as usual, the support and resistance levels. So let us go to the charts and let me show you these things in detail. So as you can see over here, this is the weekly chart, and all of these candles corresponds to 1 week. So as you know, for the people who are new to this channel, I have plotted the Fibonacci ratio indicator from the highs of the 2021 to the lows of the 2022. Now, why is this significant? It is because when this rally we saw in 2023 and ongoing in 2024, we need to know what are the important levels from where we can expect a pullback or a correction. So as you can see over here, we were getting a resistance at 1.272 level over here since last 3 weeks. And now finally, it looks like we have broken, the resistance level of the Fib ratio over here. And now we are charging higher to the R1 level over here. So my important, suggestion is, since we have broken this resistance level on the Fib time frame, now the only, resistance that I can see in the nearby time frame is this, that is R1, which is sitting at 19,200 levels. So that is going to be a strong level of resistance, and ultimate resistance is going to be this one, that is 1.618. But I'm not pretty sure that we will achieve this at this year. So let's see what happens. But this is going to be a very key area of resistance. but even before that we need to cross this R1 level, and this pivot level on the weekly time frame is going to be very strong resistance. So keep a close eye on the immediate term, keep a close eye on this top of the Bollinger Band, but even more than that, the R1 level is going to be very strong resistance. Now let us talk about the immediate support. So the immediate support is sitting at 5-day EMA, that is around 18,276 levels or 18,275 levels, which also happens to be the point of contact or the maximum volume range or the maximum volume level on the weekly time frame. So as you can see over here, each candle will have a blue neon bar indicating the most amount of volume that has occurred in that candle. So this is going to be a good area of support just in case if the markets pull back in the intraday time frame. And then the ultimate area of support is going to be this white line that you see over here, which happens to be the year-to-date anchored VWAP. So till now, as you can see, the year-to-date anchored VWAP has acted as a very nice support. So you can see over here it acted as a support, you can see over here it acted as a support, over here as well, and now this anchor VWAP is sitting at 17,000, almost 690, so 17,700 levels. So this is going to be very strong support moving forward. So keep a close eye on the anchored VWAP and keep a close eye on the 5-day EMA that is sitting at 18,260 level. So this is all about the weekly time frame. We have closed above a very important level of Fibonacci ratio, that is 1.272. so the sentiment on the weekly time frame and the technicals both suggest that we are again resuming the bullish trend and the upward momentum. So the benefit of doubt has to go to the bulls moving forward. So that's my take on the weekly time frame, and now let us go to the daily time frame. In the daily time frame, I wanted to discuss 2 to 3 important things, that is support, resistance, and the market structure. So without further ado, let me show you all of this into the technical charts. So this is my daily chart. So as you can see over here, in this daily chart, we are right now gapping up. That is, in the pre-market, we are gapping up like crazy. So that is, the latest, development. But let me discuss the resistance levels first. So just because it is gapping up, just because we had an enormous rally, today as well, it doesn't mean that we need to short and this is the time to short. Always wait for the levels to get confirmed, and let me show you the actual resistance levels. So on the daily time frame, you can see over here that R2 is going to play an important role as a resistance. But as you can see over here, the top of the Bollinger Band has quickly reversed since yesterday. So I still suspect that the real resistance in the intraday is going to come from the level between the top of the Bollinger Band, that is this one, 18,800 levels and 18,700 levels. So the real resistance, I think, is going to come in this zone. And let us talk about the support now. The support is still sitting at 5-day EMA, that is over here, the blue line that you see over here, and the actual intermediate term support is sitting at this white line over here, which also happens to be the month to date anchored VWAP. So this month to date anchored VWAP is going to behave as a really good support just in case the market decides to pull back. But as far as I can see over here, there is a complete change in the sentiment and complete change in the market structure, which is it has turned from bearish to bullish. So what do I mean over here? I mean that you can see over here the 1, 2, 3, and 4. All this 4 days worth of selling has been absorbed by today's strong market action. So whenever this kind of formation happens, there are very high chances that this actual tectonic shift has been turned in the favor of bulls. So as you can see over here, the first thing that is going to happen is we will test the previous highs, that is over here. And guess what? This previous high corresponds to the R2 pivot level that you can see over here. So there is a very high chance that we will test the all-time highs pretty soon this week. And since there are only 2 days left in this week, that is Thursday's session and Friday's session, there are very high chance that we may touch it on Friday, or we may touch tomorrow as well. So that this is going to be a strong resistance zone, and if the markets decide to pull back or digest these gains, then the 5-day EMA is going to act as a very strong support, and the intermediate term support is going to sit over here, which is the anchored VWAP. But I don't think that this week this level will be tested. The chances are very, very low. So that's my take on the daily time frame. Over here as well, the sentiment has changed, and the benefit of doubt has to go to the bulls. So the rally still continues, and the price action is confirming the bullish strength that is in the market right now. So all the swing traders out there, do not make the mistake of shorting this incredibly strong markets. So that's my take on the daily time frame. I also wanted to discuss the QQQ ETF, that is the Invesco ETF that a lot of traders and viewers invest in and do trading on. So in this instrument, I wanted to highlight some important zones and some important levels. So this is the daily chart on the QQQ, and the QQQ chart suggests that we have the top of the range over here, and we have a resistance zone over here just in case if market rallies, and we had the support zone over here which perfectly held very nicely. So as you can see over here, all this transparent green boxes are the boxes which are huge gap ups. So normally in technical analysis there is a theory which says that the price gaps, the major price gaps, always do get filled. So I have drawn all those price gaps, and as you can see, first and second price gap has acted as a really good support and has filled again. So going forward, what is the view going forward? If in case QQQ's rallies like crazy, the stop would be over here, that is in the resistance zone, wherein the top of the range, that is 448.5 or 448.6, is going to be the a good resistance point, because that is the prior high. So prior high, there is a lot of chance that the prior highs is going to get tested. The R1 pivot level is on the daily time frame on the QQQ is sitting at 447, but my guess is I still think that the prior high is sitting at 448. So 448 is going to be a really important resistance for the QQQ going forward. Now let us talk about the support. So the support, the first immediate support is sitting at 441.2, which happens to be R1 level of the Fibonacci series pivot points, and the month to date anchored VWAP is still sitting at 440. So this 440 is going to be the first support, just in case if the QQQ decides to pull back, and the longer term support is still sitting at 436. So I still think that in the Thursdays and Fridays session we are going to test 448 level, in my humble opinion. So this is an overall picture of what is going on in QQQ. So now let us move ahead with the next section. Now let us talk about the anchored VWAP charts. Now this is my favorite section because anchored VWAP is something that I recently learned, and I'm still reading the book and trying to explore things in detail. But so far the anchored VWAP has really have had a profound impact on how I trade. So let me explain you in terms of anchored VWAP as to what is happening in the markets. So the one basic principle is if the price is above the anchored VWAP, then we are in a positive uptrend. So as you can see over here, there are several lines, and I have mounted each of this line to a specific point for a reason. So as you can see over here, this yellow line is mounted exactly at the FOMC interest rate decision on the intraday time frame. This white line is exactly mounted at the point where the contract switching happened. So, and this also happens to be the prior high of the swing high, that is prior swing high. This blue line happens to be the month to date anchored VWAP chart that is mounted on the March 1. This green line that you see is the anchored VWAP that is mounted on the Nvidia earnings. So as you can see that I have mounted each of these anchored VWAPs to the important significant points in the past, so that we can know for sure that who is in control. Are the buyers in control or are the sellers in control? So as you can see over here, today we reclaimed the green, blue and white line, which happens to be the anchor from the Nvidia earnings, the anchor from the month to date, and the anchor from the previous highs, or the swing high as they call it. So now since we have closed on the daily basis above all the anchors, short term, near term and medium term and long term, now the entire control is in the hands of the bulls. So you can expect a lot of bullish action, and first is you can expect the test of the all-time high, that is 18,680 levels. So that is the scenario or the situation in the VWAP charts. The VWAP charts in any mounting points is suggesting that the price action and the sentiment is bullish. So the benefit of doubt over here still goes to the bulls. And as you can see, while all of this action was happening, this was accompanied by high amounts of volume. So this rally is not only suggesting the increase in the prices, but also it is suggesting the increased level of participation from the active participants. So there is a lot of conviction and a lot of enthusiasm over here in terms of price action for this bullish trend. So this is my take on the anchored VWAP charts, and this still suggests that we are in a bullish trend. So at the end of the day, I just want to thank you all for viewing this video and showing so much love. And I just want to request you all that please feel free to like, share and subscribe these videos so that we get a lot of motivation to do it. And I hope that you are getting a lot of value, and I hope you are developing yourselves as traders, investors and overall financial market participant. So I just want to say at last, like, keep learning, keep growing and keep trading. And until next time, catch you guys later.